Hello, friends. Welcome to Nirmal Bang. I'm Piyush Jain, and today we are bringing to you a new company, which is very soon going to get listed on the bourses. Financial services market right now, and financial services stocks, they are actually on the run. And we today are bringing to you an IPO, which is from the housing finance sector. The name of the company is India Shelter Finance Corporation Limited, and today joining us on the show is the MD and CEO of the company, Mr. Rupinder Singh. So, welcome to the show.
Thank you, Mr. Piyush. Thank you so much.
So first of all the best wishes to you for the IPO. And this is a great time. Markets are at an all-time high. In fact, Bank Nifty also basically is near or almost at all-time high. Financial services stocks are doing really well. The sort of elections are behind us. A lot of money is coming to financial service sector. It's a very good time. And now I think let's try and know basically about the company. How has been the journey for you? Why basically IPO at this point of time? How has been the growth? Because housing finance setting up, then growing it really takes time. So how it has been for you?
Yeah, I echo with you, Mr. Piyush. Housing finance is a business of perseverance, and it takes time to, reap and to reach a certain scale. So India Shelter also came into picture 13 years back. Now we are 13 years into business in year 2010, and those were the days when market was booming, but into prime segment. So there was a housing finance companies, large banks, FIs. The focus was morely on the templated product, targeting the top 12, 15 cities across the country, majorly the mid and upper middle level, the creamy layer, you can say, which are part of the financial inclusion that time. Uh, those days, then India sheltered, took this dare to enter into the market, which are beyond these limits of top 15 cities, thinking about more on self-employed, the ecosystems which are far-flung, typically tier 2, tier 3 markets, self-employed category, which was not considered to be this category where, given the priorities when it's about the home loan disbursements. These category normally, when we thought of are customers which may or may not have a proper banking, and they may not have a proper financials to demonstrate their ability to pay, and required a lot of hard work effort on that side. So 2010 when we started from Rajasthan with the humble branches of two branches there, Udaipur, Kota. Then eventually, as we start honing our skill toward the underwriting, we start spreading our wings. So Rajasthan was the first state, then eventually moved to Maharashtra, MP, and to the southern states like Karnataka, Tamil Nadu, and rest of the places like UP, Uttarakhand. So this is the way the journey started. And if we see today, we are present in 15 states. Out of that, the 12 states are more than 5 years in terms of vintage and spread across 200 branches. So this is the current state of affair. Journey
Right.
was consistent.
No, continue, please continue.
Journey is consistent, and there is a year-on-year improvement in terms of growth. Learning is enormous. Build a lot of credit models, lot of processes and structure which should be long-lasting. That's a philosophy end to end.
Right, and I want to ask you. You actually touched upon your honing underwriting skills in when actually you first started the branches, and underwriting is the biggest secret sauce in this business because else you basically have a borrower. Basically, you are lending to them. There is a collateral, and then you can keep actually building upon it. It's a leverage business. So, how's the sort of underwriting technology, or how's the underwriting model being developed, and what's the current status right now?
Uh, since from beginning we knew that this is a segment which is beyond the fixed income like a salaried profile, and need to be very well taken care of in terms of understanding how the incomes are getting generated. Triangulation of their income is very, very important for us. So we created a right blend between people and technology. So one side, we built up strong network in terms of branches. Other side, we start using the technology so that the right output should come around that side. Uh, Company is one of the earliest adopter of loan origination system like Salesforce, which is also acting like CRM, where a lot of
Hmm.
integrations were built in last 10 years of its life, so that we can give a right applications at the field, which can help even for the underwriting who is doing in any kind of territory, to get the right set of data, which is important to get the right output on that side. So this is the beginning which happens, and as we keep progressing, today we see that there's a lot of investment which continue to go in the technology side. Having said so, people still are important. Every customer we touch base at the first point of interaction when credit manager meets it. Then there is a additional evaluation of property which happen additionally around that piece by the separate team, which is a technical in-house, and there's a special team which has been for service side for each customer from every branch. So we have created that ecosystem as we keep developing our process of improvement.
Right. So you just actually said that there are 200 branches now. And I'm just repeating and just asking that question again. How many of these branches are already 5 years old?
So if we see, we are in 15 states and 12 states are 5 years old. If we see the branches per se, there are around 80 branches which are 5 years old, basically out of that.
Okay. And usually, so how much time it takes for the branch to achieve mature stage? 3 years?
Break even happens around 8 to 9 months, but reaching to the right capacity takes around almost 3 years.
3 years, right, sir. And what's the average in your mature branches? What's the average sort of loans per branch you're seeing on an average scale?
So every branch has a set of people and they have a capacity to deliver. So instead of volume, we always believe in the number of loans which each branch should able to deliver. 18 to 19 units, if a branch reaches, that is the level where we feel that they have achieved to the peak of the branch. And if it happens, then there is always a scope of fragmenting further, and so that in near vicinity we can further penetrate into those areas.
So when you're saying 18 to 19 units, it implies 18 to 19 loans per month?
Yes, absolutely.
Okay, understood. And I think because your loan ticket size is concentrated between economically weaker LIG and then MIG, that would imply that the average ticket size would be somewhere around 20 lakhs, 30 lakhs?
Our average ticket size is around 9 to 10 lakh rupees. And our range of giving loan is between 5 to 25 lakhs. That is our focus area. That's a range around that side.
Okay, sir. Great. And at present, sir, what's the sort of spreads you're working upon? And is that where you're right now? Is that your sort of average mature spread?
From once we realize what is our sweet spot, that is in terms of ticket size, which I mentioned, 9 to 10 lakh rupees. We also feel that this is a market where we have to maintain the yields consistently, so that the numbers which is optically has to be correct in that way. We feel that 6% of the spread is important, and we continue to maintain that from years now. So this is the one of the mantra which we always keep directing down the line team as they source the new files, new customer on that piece. So one side we don't feel that it has to be pressurized in terms of improving the yield number. Other side we need to maintain that standards, which is important that side. So 6% of yield is NIMs what we try to maintain across basically.
So over the last 1 year, sir, just sort of recapping it, over the last 1 year, the NIMs have been around 6%?
So it is from last 3 to 4 years.
Last 3 to 4 years. The reason why I was asking this question because it's interesting, because sooner or later it's only about when there is going to be sort of cut in the interest rates next year. Timing we can't debate, but somewhere it's going to happen. And when that happens, your average cost of borrowing gradually will come down because your concentration of your liability is between 1 and 2 years. So when that cost of borrowing starts come down, and usually your loans which you're giving, they are almost 80 to 85% of floating rate loans. So they move with the sort of benchmark rates. At that time, basically, what happens? Are the NIMs going to expand because if you're already around 6%? Like what happens? What's the strategy there?
So philosophically, in the past trend also, as mentioned, so even couple of years back, even the cost of funds were quite low. This is the recent phenomena where the cost of fund has gone up. Even during those times, we try to maintain that peace, basically. And this is the philosophically that we want to carry on legacy.
Okay, okay, sir. And also, sir, help us understand how actually you have been able to maintain a nice, very competitive cost of funds.
So we have a 37 bank lines across, basically, and thankfully, as a housing finance company, there is a support of NHB also. Almost 19% of our funding comes from NHB. So this is a right blend that we able to get through. We had a rating upgrade also last year, which is from A to A plus, and that also supported us on that piece. So strong treasury team, strong focus on this side, and obviously the keeping in marking the right tabs with the right optics, that's helping us out.
Right, sir. And I also want to understand that from the perspective of disbursements, it was almost 50% growth over the last year. From the perspective of AUMs, it has been a almost not, but still almost 45-50% growth in the AUMs. Healthy growth in the profit, but it's more about the disbursements. Was this largely a function of the branches which had opened earlier, or like there was something where branches are maturing? Like what happened here?
So a branch is a cycle. The number of branches what we opened 3 years back, they start delivering in terms of the output. In fact, the new
Right.
branches there also, the number starts pouring into that side. Apart from opening of branch, there is a drive on the productivity also that is also improving quarter on quarter. So these two items which are important for raising the numbers are pretty effective for us. So from beginning, the distribution has been a focus area, and keeping in mind the right blend, that is the thought around piece basically. So
And so
productivity, and also the opening right branch at right place. These things are helping us out basically.
one small, sir, if the number is handy. What has been this cost to income trend? Like where are we right now?
So as we opened large number of branches in last 2 3 years, so cost to income was on a high side, but since productivity starts pouring now, so that there's an improvement. Earlier it was 46, 47. Now it has come down to 41, 42%.
That's not bad because there is still room of improvement as per the industry standard, which implies you still have scope actually of really sort of improving the net profit margins also. So I think that's something good, I think, which the viewers will actually take note of. And it's, I think, natural for any sort of company which is in the growth path here. From the other perspective, so help us understand in this IPO how much funds you're raising, and also sort of what's the usage of those funds.
So this IPO size will be of 1200 CR. Out of that, 800 will go to primary, and 400 will be secondary sale. The major usage of this primary funds are more toward building the business only. It's a capital requirement. It's a capital intensive business. If you see that mortgages, and today we have a net worth of 1375 CR when we talk about September numbers. This is for further support in building the capital around that piece. And with the capital which is beyond 2000 crore is important in terms of ensuring that we are a part of bigger ecosystem in terms of getting a better funding lines. Also, we can request the rating agency with this kind of piece to look again for the improvement.
Right. And what is this the usual leverage in the company? I'm trying to calculate here, like 800 crores being raised. Obviously, that will go for lending. So, what's the sort of asset turn here, sir?
So leverage in September is 3.5 leverage basically,
Three and a half.
and if you see with the current set without this capital, we may be a quarter, 2 quarter away, where this could have reached to the 4, which is the expectation of this entire ecosystem. So that is the reason we being a little conservative and proactive, we are coming for this primary raise.
This actually tells me, I'm just making my own guesses here, but this tells me that with this sort of fundraising, for next 2 years you won't be needing anything unless there is a huge stupendous growth. But for next 2 years, I think you will be sort of covering up the growth. Will that be right assumption?
I think our plan is to continue with this capital for 3 to 4 years because
Oh,
instead of, yeah.
yeah. So 800 crores should suffice for about 2500 to 3000 crores sort of lending. That be a right assumption, sir?
And the profitability margins are good. I think assets is giving
So
good
cash
return on
flow
the
will
first.
come up.
Yes, cash
Yes.
flow should come up. That also further, give a scope of, taking for the next couple of years.
Right. Fair enough. Now, one word, sir, around from the perspective of expansion. Already you're in 15 states, if I remember the sort of number rightly. What's the strategy around the geographic expansion? We want to expand more, or you want to actually sort of build your presence in a couple of states? Like, what's the strategy for the next 12 months?
Um, we have a 13 years of vintage, and from beginning we are being very clear which are the markets we had to go, where the mortgage market is available, where we can have a decent way of improving our productivity around that piece. So today with 15 states, we are covering almost 94% of mortgageable market in country. So this is the strategy which has been as built, is getting executed from last many years. I think with 200 locations in 15 states, still there is a lot of scope in terms of penetration. So instead of focusing more on the expansion into new geography immediately, I think there is more focus will be drive in terms of improving productivity and improving the penetration in these existing states.
Yeah, because largely you've left Northeast, but apart from that, most of the bulk areas you've already covered.
Absolutely.
Right, sir. So perhaps that's good. And I think the last question, perhaps, how are you looking at the markets at present? Like overall, how has been this financial year for you so far from April till now? What you have been hearing again from on the sort of on the grounds level, how it has been for you?
So if I particularly talk about affordable housing, I think we have just scratched the surface around. There's a lot of awareness which is coming up, and people are looking for these kind of loans in this category of LIG and MIG, which is the focus area on that side. Infra development and development in these vicinities, that's helping us out for pouring of this business. Thankfully, there are a lot of government initiatives also in last many years, which has also given impetus to these business lines basically. I feel typically for affordable housing, there is a lot of positivity around.
Indeed, we are seeing some great buoyancy here. But Mr. Singh, thanks a lot for coming on the show. From our side, from our viewers, we extend to you all the best wishes for a very successful IPO and a very successful listed journey. We hope to stay in touch with you for your next result season, your post listed journey. But for now, thanks a lot.
Thank you so much, Mr. Piyush. Thank you so much.
And dear viewers, with that, we come to the end of the show. Hope you enjoyed it.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.